This webinar is dedicated to Zoho Books, fixed asset management, efficient fixed asset management with Zoho Books. I will flip through a few slides to put perspective to the topic for us to look through what is fixed assets, what is depreciation. Then we'll flip to the other side where we'll use the software to present on the use of Zoho Books to manage your fixed asset. So let me quickly start with full screen. So introduction, we'll be looking through in terms of agenda. We are going to look at what is fixed asset, what is depreciation, methods of depreciation. We'll look at presentation on the topic as the efficient use of Zoho Books to manage your fixed asset. We'll look at fixed asset types. We'll look at adding fixed assets one by one to your Zoho Books, adding asset by importing. You can also add in asset by purchase. We'll look at disposal. Once you talk about asset, you have to look at disposal. We look at write-off. So what is a fixed asset? What is fixed asset? What is fixed asset? Fixed assets are the assets that businesses intend to use to produce or provide goods and services and are not intended for sale in the normal course of business, unlike inventory, according to IAS 16. So what we are trying to say is that a fixed asset is also an asset, but it's a different type of asset, unlike your inventory, where you are keeping for sale in the normal course of business. Fixed assets are kept in business, but not for sale. We have examples like land, building, furniture, equipment, and vehicles. So these are examples of fixed assets. They are mostly tangible. So look at what we are going to be exploring in terms of fixed assets. Now, what is depreciation? It's a very common topic. If you have gone through a bit of accounting education, you might have met depreciation by now. Over here, in simple put, depreciation is defined as the systematic allocation of the depreciable amount of an asset over its useful life. Mostly when we look at depreciation, some have a myth about it and think that it's a way to keep money aside so that when the asset is, that could be economic reason. However, in terms of accounting, it is based on a particular concept in accounting called a matching concept, where your revenue for a particular period must also be matched with expenses related to that period. So if you buy an asset and you're using the asset to run the business, obviously you are incurring expenses. As the days go by, the asset is losing value, is depreciating. Therefore, you must also allocate expenses to that particular revenue for that period. Hence, the school of thought for depreciation. Breaking it down, we said is the systematic allocation of depreciable amount. What is depreciable amount? Is the cost of asset or the revalued amount less the residual value. Over here, residual value is looking at the value you would gain from the sale of the asset or the value you would be able to ascertain after the useful life of the asset. That's the residual value. Systematic allocation, you're also making reference to what methods you are using. There's so many methods, but as far as this training is concerned and Zoho Books is concerned, we limit ourselves to the two main popular methods, which is the straight line methods and the reducing balance or the declining balance method. Now, depreciation must be charged rationally and consistently over the useful life of the asset using acceptable methods. So it must be charged rationally. It must be charged consistently. It must be charged consistently means that if it is monthly, you have to charge it monthly. If it is annually, you charge it annually. And it must follow a standard. You don't just today, okay, this month I feel the asset has really been utilized. We produce a lot. So I think depreciation must be charged by a certain amount. I mean, you may be very subjective and biased. So it must be consistent, it must be systematic. And you must also understand what is useful life. Is the period over which an asset is expected to be used. If I have a computer and I expect it to last for 5 years, that's the useful life of the asset. The number of units of production it can generate, that is also a useful life. Purpose. What's the purpose of depreciation? It is used to spread the cost of the asset as an expense in the income statement, matching it against the revenue it helped to generate. The matching principle is being observed when we are able to practice depreciation very well. Depreciation definition being broken down. Well, I think I've written this slide. So then we have to look at the methods of depreciation. When we talk of depreciation, we said that it must be administered properly and it must follow a certain laid down principle. But one of them is the methods you are using to do the depreciation. We are going to limit ourselves, as I said earlier, to two main methods. One of the methods, that is the first most popular method, is the straight line method. Very easy. Now, when we talk of depreciation, irrespective of the method, we have something we call pro rata and non-pro rata, or non-pro rata or pro rata. When we say a depreciation is being done on a non-pro rata basis, what it means is that if an asset is acquired within the period or within the year, in this case, I'm talking of the financial year, irrespective of the month it is acquired, we charge the full year. That's non-pro rata. So you consistently charge the same amount, irrespective of the month, irrespective of how many months the asset was used. Now, the pro rata says that if the asset was used for, say, 6 months, you would charge depreciation for the 6 months in that particular year. You wouldn't charge depreciation for the full year. That's the difference between pro rata or non-pro rata. Irrespective of the method you are choosing, you can still apply the pro rata and the non-pro rata. Now, depreciation is charged for the whole year, regardless of the purchase date. That is the non-pro rata. Assets purchased on 1st October 2025 will still charge depreciation for the entire 2025 if it is non-pro rata. And the formula will be annual depreciation will be cost minus residual value over the useful life. Now, if it is pro rata, depreciation would be that will be charged as per the formula above, but this time we will multiply the depreciation by the number of months in use over 12 months, since we have 12 months in a year. What it is that you are prorating the period for which the asset was used over the 12 months. That's the pro rata and the non-pro rata. And when it comes to the straight line method, what depreciation is calculated on a straight line basis. What it means is that if the asset is going to be used for 5 years, you divide the amount by the number of years. If it is in months, it means going to be 60 months. Divide the number, the cost or the depreciable amount by the 60 months. That is, you get, so every year or every month, depreciation is going to be the same. Unlike the declining balance method, depreciation is calculated on the net book value or the written down value. And in this case, the same method, if it is non-pro rata, it's going to be the opening book value times the depreciation rate. If it is prorated, if it's a prorated basis, which is a partial year, it is the opening balance times the rate times the month in use over the months in the year. So that is how we also calculate when it comes to the declining method. Unlike the straight line methods, where it is the full amount divided by the period, declining method is always going to take into effect the depreciation, the accumulated depreciation. That will give you the net book value of the asset times the rate times the months in use. If it is that is if it is prorated or if it is a pro rata basis. Now, in terms of depreciation, we also have to look at some examples of all that I've said. We'll try to put some figures to it to understand on the face value of the figures. So when it is non-prorated or when it is non-pro rata, we are saying that in the month of, let's assume a case of, so this is calculation example per methods of depreciation using the straight line method. A fixed asset bought on 1st October 2024 for 10,000 Ghana cedis with a useful life of 5 years and a residual value of 1,000. In the month of 2024, we're going to have 12 months. If it is non-pro rata, 2025 is going to give 12 months, 2026. So because you are going to charge full depreciation in the first year, you will not have it cross into the fifth year or into the sixth year. So you charge for 2024, 2025, 2026, 2027, 2028. They will be 2029. Unlike the pro rata, because in the first year you can't charge the full depreciation, there will be after the fifth year, you will still be left with 9 months to charge, because in the first year, because the asset was bought on October 2024 or on October in the year, you will need to charge 9 more months in the period of in the next year, or which is the sixth year. So in this case, we will have 9 months to be charged over here. And as I said earlier, if it is straight line method, the depreciation is going to run through the same amount from year 1 to the last year. Once it is prorated, you will see that in the first year, you can't charge the full depreciation. So we can only charge 450, which is the rate, which is the amount of 10,000 divided by the 5 years, but this time times 3 over 12. That gives us 450. So in the last period or in the last year, you see that we had the excess of the 1,800 being charged for the 9 months also here. But you notice that throughout the year 2 to year 5, we have to charge the full year, which is the same amount, because this is on a straight line method. Let's look at the declining balance method. It's also simple, but this time it's taking effect of the depreciation charge so far. So in the same case, a fixed asset bought on 1st October 2024 for 10,000 Ghana cedis with a useful life of 5 years and a residual value of 10,000 at a rate of 20%. Mostly, declining balance will require a rate. If it's non-pro rata, in the first year, you are charging the same, the full year, which is 12 months. That will give you the 2,000. 20% of the 10,000 gives you 2,000. Now your accumulated depreciation as at the first year, the end of the first year will give you also 2,000. The closing balance at the end of the first year will be 8,000. That becomes your opening balance in the year 2. Your depreciation of 20% on this, the depreciation, the closing balance, the depreciation now becomes 3,000. The accumulated depreciation now becomes 3,600, which is the 2,000 plus the 1,600. I know you understand these, so I wouldn't go much into the figures one by one. So that gives us the closing balance of 10,000, because we are saying that residual value of 10,000 should give us, should be the amount we should expect to gain from the asset in case we dispose it off. So this will be your opening balance, which is the closing balance of the previous period, your depreciation for the period, and then your accumulated depreciation. The same effect will be noticed when we do the pro rata. In the first period, because we are prorating, the depreciation for the period will be prorated, and that, for that matter, the depreciation becomes 503, which gives us a closing balance of this. And that going down to the fifth year, will cross the fifth year into sixth year, because we charge only 3 months in the first year. And that gives us also the closing balance of 10,000. The same figures as we have gone through earlier. Now, if we have gone through the introduction, which at this point we've got to know what is a fixed asset. We've also gone through what is depreciation. We've gone through the methods of depreciation. I want to exit the full screen and shift to my Zoho Books. I believe you can still see my screen. Give me a thumb up. a thumb up if you can still see my screen. Great, great, great. All right. So going into the Zoho Books, this is the system that we are going to use to manage the fixed asset efficiently. Zoho Books is one of the over 45 applications from Zoho. We as official partners have actually recommended and sold, set up, implemented, and trained quite a number of businesses in Ghana who are using Zoho Books efficiently. So this training will be based on that. If any of us here at this point would like to get in touch, I'm sure at the end of this webinar, a mail will be triggered and we can also get in touch on that. However, over here, when you log on to your Zoho Books, this is the dashboard. Since this training is not meant to take you through the full Zoho Books, I would go through the main issues that we'll be discussing from the Zoho Books, which is a fixed asset management. Now, it is not, you are supposed to find it right under the accountant model. When you log into your Zoho Books, we have the home, which is your dashboard. We have the items, inventory, sales, purchases, time tracking, banking, depending on the version of the software that you are on. All these models will be allocated to you. Now, under the accountant model, you have a fixed asset. It will not appear here if it has not been activated. So to activate it, you click on the gear icon at the top right corner, and then you search for general. So this is where you set your specifications on the various models that you want to activate on the system. So you check your fixed asset. Once you check it, you scroll down and you save your settings. Now, after checking and activating the fixed asset, you can now go to the accountant and click on the fixed asset model. Now, typically when you come to the fixed asset model, if it's your first time, you will not see any of these assets here. These are assets, fixed asset that I have added to the system, and one is fully depreciated, one is activated. That is when you check at the status, you'll notice that this is fully depreciated, meaning the asset has come to the end of its useful life. Active, meaning that depreciation has been set up and it's running on the system. Draft is where an asset, a fixed asset to be specific, is set up, but you've not activated it yet. The system gives you the room to set it up, gives you a draft for you to review before you finally activate it. So if there are any checks and balances, you can do that before activating that. Now, once you are here, one major thing I would like to mention is the asset type, the fixed asset type. The fixed asset type is what gives you the rule for your depreciation, whether you are using straight line method or declining balance method, or whether you are using non-pro rata or you are prorating it. So you first have to set up your fixed asset types. To set up your fixed asset type, as I came here, you go to your accountant, click on fixed asset. Whilst at the fixed asset page, you will see manage asset types. Now I can click on new to set up a new fixed asset type. Over here, I have to give my fixed asset type name. So let's say this is furniture, or let's call it office desk or office cabinet. Method of depreciation. So this office cabinet, anytime we buy it, what fixed asset depreciation type are we supposed to say? It's more or less like a template you are setting up in the system. That anytime you are setting up a fixed asset, you can assign this template of calculating depreciation to that particular asset. Let's assume that this one you're going to use the straight line method. And then the frequency is going to be monthly. And the fixed asset life, let's use 5 years. Computation is going to be non-pro rata. When you charge the depreciation, the accumulated depreciation, which account do you want it to be in? Fixed, furniture, and equipment. The depreciation expenses, where do you want it to go to? I would still prefer to choose depreciation expense. If you want to keep it in a specific chart of account, you can just click on new and add a new chart of account. So once that is set, I have added a fixed asset type to my system. It's saving. Great. So this is office cabinet fixed asset type. I can now go back to my fixed asset, and these are the fixed assets in the system. As I mentioned earlier, we'll look at the presentation by adding fixed assets one by one. We are going to add a fixed asset to the system. Whilst on the fixed assets page, you can add a fixed asset. What is our fixed asset name? Let's call it cabinet. Let's call it cabinet. Purchase value, let's assume we bought it. For the purpose of the example we are using, let's assume we bought it 10,000. And we bought it on the October. You can backdate from date and whatever date you want to use. October 1st. Now let's assume you have a serial number. You can put it here. Current value of the asset. So if I am now, let's assume that the asset was bought October or January 2024, and some depreciation has been charged in your old system, maybe QuickBooks, Xero, Odoo, whatever system you use, and you are migrating to Zoho Books. So you can also bring the current value, which is the value of the asset you bought minus the depreciation you have charged, and that will give us the current value of the asset. So we are assuming that in this system, we haven't charged assets, the depreciation on this asset yet, this fixed asset yet. So I'm putting the same 10,000 Ghana cedis here. Now, if there's a warranty for this particular fixed asset, you can also set it here so that you also monitor your warranty on every particular asset. That's a pro bono from Zoho. You can give description to this asset over here. Then the disposable amount, if the asset is finally utilized in the normal course of business over its useful life, what amount are we estimating to realize? That is the residual value. Now, we set up a fixed asset type, So based on the fixed asset that you are going to be depreciating, we set the fixed asset type. So I can comfortably assign it to it. Once I assign it, you will notice that it has auto-populated the various information I use to design or create the fixed asset type. If any of these is not what I want to assign to the fixed asset I am working on, I can comfortably click on add new, and I can add a new fixed asset type to this particular the system, where from there I can be adding it or assigning it to any fixed asset that I want to assign. Now, fixed asset account, we have already mentioned that it's a furniture, and the accumulated depreciation is this. The depreciation expenses was set when we're designing the fixed asset. So this is a note reporting tag. These are advanced way of managing your reporting with tags and all that. We can explore tutorials on Zoho Books if the recommendation and the popular request suggest that. So I have saved it. Once you save it, if you come into draft, whilst in draft, you can edit, you can clone. Clone means you want to do another one of the same, similar, make changes on it and save it again. Now, I can also delete it. If I review and I see that what I've done is totally off what I want to do, I can delete it. Or I can mark it as active. Once I mark it as active, the assets, I think, okay, I get it. I get it. The useful life I set was in months, and I put 5 months. So because I put 5 months, it has already depreciated the asset, and it will show you your depreciation that you have calculated on this particular asset till now. So from the first depreciation was 31st of October up to date. It is because of the amount of months I put in there. Now let's go back to asset. Let's go back to asset and back to asset. Let's pick this particular asset, which is fixed furniture, which was added earlier from the same method. Let's go to depreciation. Now, depreciation was annually. Depreciation was set for annually. So let's go to edit. You'll notice that depreciation percentage was 20% because we're using the declining method. Depreciation was set to be 60 months, but to be charged annually. Depreciation was set to be 60 months. So the useful life of the asset is 5 years. Depreciation is going to be for 60 times, which is a 60 months. However, we want to account for the depreciation on annual basis. So if you check the computation that has been done, you will notice that the depreciation was charged annually. If we want to charge this depreciation monthly, we can equally change it from annually to monthly. Once we save it as draft, we can review our depreciation, and it will give us the graph of the depreciation and also the list of the amount that is going to be applied on the monthly basis to your financial system, which is your bookkeeping system, or that is your Zoho Books, to be specific in this training. So that is basically how to add assets to the system, how to add fixed asset to the system. You can equally add a fixed asset by importing. So we can click on this icon, the three. Whilst on the asset page, you can click on the 3 dots next to the plus new, and you can click on import fixed asset. The system will give you a template where you can download a sample template. You populate it, you choose the asset, and then you upload it. Every information in there can be uploaded, and it will reflect in your asset list as well. Back to fixed asset. These are not the only ways you can actually add asset to your system. You can also add asset by purchasing a particular asset. You can add an asset by purchasing the asset. So to add asset by purchasing the asset, let's go to the model itself. There's a model here called purchases model. In the purchases model, we'll have to look at bill. But before you can buy an asset on a bill, you must first create a chart of account for the asset. So let's go to chart of account, where you click accounting and you go to chart of account. I created one. Let's look at it quickly, and we'll create another one. Now, this chart of account was created as furniture, office, furniture and equipment as a chart of account. This furniture and equipment is a fixed asset, and therefore I have assigned a fixed asset type. That is what we are going to use to compute the asset anytime it is being depreciated, or anytime we are creating it as a fixed asset in the system. Let's create one more chart of account, and over here we'll go to, we are in the chart of account, let's say new. So the asset will be fixed asset. The asset type or the account type will be fixed asset. This fixed asset, the name will be what? Let's call it furniture and fittings. It can be vehicle, it can be building, it can be whatever asset you are tracking. We can make it a sub account of another account. We can leave it alone. Now, this is very important. Create item as fixed asset. What it means is that this chart of account is being dedicated as a fixed asset. So anytime we use it on a bill, we want the system to create it in the system as a fixed asset. It's a way to automate your processes so that you don't buy the asset and now come and create the asset under the fixed asset model. So right at the point you are creating the bill, the asset, the fixed asset for depreciation or fixed asset management will also create the asset under the fixed asset model. Now, if I am creating this asset as a fixed asset for fixed asset management under the fixed asset model, then I need to assign a particular fixed asset type. Remember, I said we created it as a template that will help us to do what we call the computation of the depreciation. It sets the useful life, set the depreciation rate and the period and blah, blah, blah. So let's assume we are going to use the furniture and fitting asset type. You can put your description, save it. So now I can comfortably go to bills. Before I can create a bill, I can also add a vendor. As I mentioned earlier, I want as much as possible stay within the the scope. So let's assume there's no vendor. We can add a new vendor. And the vendor name is sample vendor. All right, the display is sample vendor. I want to leave all the rest of the details so we can move fast. All right, once I have my vendor, I can also give the bill number. The bill number means that the vendor has given me an invoice and the reference on the invoice becomes my bill number. So let's assume it is BN001. Bill date, let's assume we are buying it on 1st October. You can backdate, can front date, you can whatever dating you want to do. And then the due date for the bill is set. I want to choose the asset that we created. I think it was furniture and fittings. Now, the quantity is 1. Let's buy it for 10,000. If there's any discount, there's any taxes, if there's any customer we want to assign this to, there's any amount, whatever, the amount will to populate it. I want to leave out the other details. And then I can, is there anything I need to check? Let me save it as draft. And I can convert it to open. Now, because I have checked this asset, I can comfortably go into my asset model and I expect to see that furniture and fittings has been created and it is saved in draft. So this is another way you can add a fixed asset to your fixed asset management model so that once you purchase it, because when you were creating the chart of account, you told the system that it is a fixed asset. So henceforth, anytime I purchase this asset or fixed asset, you must create it as a fixed asset. Then to be able to create it, I must assign a fixed asset type that will help me to now set the parameters for depreciation right at the point of creating the bill in the system. So let's go into it and view the details. So this is the amount of the asset. This is the date we bought it, and the useful life is 5 months. We want to edit this one to the useful life of 60 months, and depreciation to be changed to be charged monthly. So that's the beauty of saving it in the draft to help you to be able to go through it. So 60 months. We can also set the disposable value. So let's assume in this case, the asset disposable value would be, where is that button? Great, over here. Let's say it's going to be 2,000. And the depreciation method we want to use is declining method. And we want to also prorate it. We want to see how this also would turn out. So I save it as draft. percentage cannot be 0 when you set it to declining method. Declining method relies on percentage. So let's use 20%. And we are saying that the period is 60 and it's going to be charged monthly. Let's make it annually to make it easy to analyze. So save. Once it's saved, we can also mark it as active, or we can just go and review the trend. It's going to be charged from October. Because we said it should prorate, you can see that from October to January, then January to January again. So let's go quickly into that. 31st October, you find 31st December 2029, 31st December 2024. We computed it for only 502.73. When I was showing it on my slides, it was 503. So right over here, let's show it quickly. That was 503 because it has been, this is having 2 decimal places. So this has been approximated. Correct. All right. So this is how we can actually add fixed asset to the system. We can add it through purchasing. You can also add it through import. You can also view the drafts, see your depreciation trend, go through the computation. If it is not right, quickly go back to the overview and analyze what has been, what has been done. So over here too, I can clone it, meaning I want to, probably we have bought another fixed asset, which is furniture and fittings. Let's say this time, what again can we buy? A sofa. The number is, this number here is auto-generated. You can configure it to whatever preface you want to be, whatever next number you want to set. You can do more even at the setting side in the Zoho. You can have different transaction series for different types of transactions in the system. So that is for another day. So once I clone it, I can equally save it, and that becomes another asset in the system. I can mark it as active. Once I mark it as active, the status will change. When I go back to my fixed asset, I have 2 active ones, 2 fully depreciated, 2 in draft. So this is a breakdown of your fixed assets in the system, and this becomes your fixed asset register. Now, let's go to if an asset is supposed to be disposed of. Let's go to the ones we have actually fully depreciated. I can click on this icon or these 3 dots or button and call it, click on the sell. So we want to sell this asset because now we fully depreciated it. And not necessarily because it has been fully depreciated, even whilst in the lifetime of its service, we can still sell the asset for whatever reasons. So when you are selling the asset, that's what we call disposal in accounting. So we can do that through an invoice, where we can create an invoice in the system, assign it to this asset, the line item for it, the gain or loss. If you are selling this asset, the question is that which account do you want to keep it in? Do I want to keep it in my gain or loss account, or I want to keep it in my what we call another type of account? I can do that. And the selling date can be provided. The reason for the sale can also be done. So that is how you can also dispose of your asset. Now, equally the same way, you can write off the asset. If the asset has also suffered some impairment, I think I'm going too much into details. Forgive me. It's not accounting class. It's not practical accounting. We have a special session we call practical accounting, and that is where we actually practicalize the accounting we have learned in school on the accounting system. So forgive me for those terminologies. Impairment is just when the asset has lost value, either damage or whatever reason that it is. So other than that, also an asset can be written off. Now, when we are writing it off, what expense account do you want to keep it in? Is it asset write-off or depreciation expenses or whatever? I can set the account, write-off date, reason for the write-off. Once you write off, the calculated depreciation after the write-off date will be deleted. So what it means is that if I've calculated depreciation from January to December or January to October, once I write it off at the end of October, the rest of the depreciation that has been set in the system that would have been added to your system as and when they fall due would all be what? Will be deleted. It's not saying that you delete the preceding ones, but the going forward would all be taken away from the system. So these are what again can we talk about as far as my slides is concerned? Yeah, I've spoken about fixed assets types, adding fixed asset one by one, importing fixed asset, adding asset by purchase, adding asset by disposal, and also adding asset by adding asset. Did I say adding asset? Disposing assets and writing of assets. So these are the various functions that come with the fixed asset management in the system. So we have gone through all that, and at this point, I want to pause here